Welcome to the exciting world of Forex trading. It's the largest and most liquid financial market globally, operating 24 hours a day, 5 days a week. Think of it as a massive non-stop currency exchange. Traders, big and small, participate from every corner of the world. They buy and sell currencies, hoping to profit from the constant fluctuations in exchange rates. Imagine traveling abroad and exchanging your currency. When you return home, you exchange it back. If the exchange rate is favorable, you make a profit. That's the basic idea behind Forex trading. You're buying one currency while simultaneously selling another, aiming to benefit from the price movements. The Forex market offers immense opportunities, but it's crucial to grasp the fundamentals. Before diving into complex strategies, let's break down some key terms you'll encounter on your trading journey. Understanding these basics will empower you to navigate the Forex market with confidence. So let's get started. Before you jump into trading, it's essential to understand the language of Forex. Don't worry, it's not as complicated as it seems. Let's demystify some commonly used terms. A currency pair involves two currencies. You buy one currency and sell another. For example, EUR/USD represents the euro against the US dollar. The ask and bid price are also crucial. The ask price is what you pay to buy a currency, while the bid price is what you receive when selling. The difference between the two is the spread, which is essentially the cost of trading. These fundamental terms are your building blocks in Forex trading. As you progress, you'll encounter more, but mastering these will give you a solid foundation. Remember, a little knowledge goes a long way in the world of finance. In Forex, you don't buy currencies in single units. Instead, you trade them in lots. A standard lot represents 100,000 units of a currency. Don't worry, you don't need that much money to start trading. Brokers offer mini lots, 10,000 units, and micro lots, 1,000 units, to make trading accessible to everyone. Think of lots like packages. A standard lot is a large package suitable for experienced traders with significant capital. Mini lots and micro lots are smaller packages, perfect for beginners who want to manage their risk effectively. Choosing the right lot size is crucial. It determines your potential profits and losses. Start small and gradually increase your lot size as you gain experience and confidence in your trading strategy. Leverage is where things get interesting in Forex. It allows you to control a larger trading position with a smaller amount of capital. Think of it as borrowing money from your broker to amplify your potential returns. For example, with 1-to-100 leverage, you can control a $10,000 position with just $100 in your account. While leverage magnifies profits, it also amplifies losses. It's a double-edged sword that requires cautious handling. Margin is the amount of money your broker requires you to hold in your account to cover potential losses. It's like a security deposit. Understanding leverage and margin is crucial for managing your risk and protecting your trading capital. Let's talk about the costs involved in Forex trading. Pips, spreads, and swaps are essential concepts that influence your profitability. A pip is the smallest price movement in a currency pair. It's like the basic unit of measurement in Forex. Even tiny pip movements can translate into significant profits or losses depending on your lot size and leverage. The spread is the difference between the ask and bid price. It's essentially the broker's commission or fee for executing your trades. Spreads vary depending on the currency pair and market conditions. Swaps are interest rate differentials between currencies. If you hold a trade overnight, you'll either earn or pay swap fees depending on the interest rates of the currencies involved. Understanding these costs helps you make informed trading decisions and optimize your trading strategy. Remember, every pip counts, and minimizing trading costs can significantly impact your overall profitability. Congratulations! You've taken the first step towards mastering the basics of Forex trading. Understanding these fundamental terms and concepts is crucial for navigating the complexities of the currency market. Remember, knowledge is power. The more you understand the mechanics of Forex, the better equipped you'll be to make informed trading decisions. Start small, manage your risk, and never stop learning. The Forex market is vast and ever-changing. Embrace the learning process and enjoy the exciting journey of Forex trading.